Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Brian, the market is always changing, and some of the tactics that may have worked a couple of years ago might not work today. So what do you think the number one thing is that people can do to make sure they're going to be successful in today's market?
You just need to look and find the opportunities that exist at the time and in the market that you're in. Every market, every decade has a whole different feel. Every year functions differently than the year before it, and it will function different next year as well. You've got to constantly kind of have your eye out there trying to identify opportunities that are coming. And there's a cliche that I think really steers us wrong that says opportunities fall in our laps. I just don't think that that's true. I think what happens is opportunities pass by our line of sight. And if we are astute enough and paying attention enough, and we recognize that that opportunity is passing by our line of sight, and we have the guts to grab it and then do something with it, that is what's going to make us successful. It's not just dumb luck, stuff that's going to fall in our laps. It's us being aware, identifying what's going to work for us, grabbing it, and doing something with it.
Brian has been buying rental properties since the 90s, and in that period, there's been good years and bad years, low prices, high prices, low rates, high rates, you name it, Brian's been through it. And he's always figured out a way to buy rental properties and to make the numbers work. And on the show today, we're going to talk about how his strategy changed depending on what the market was like and what he's doing today in this market. Joining us on the podcast today from Phoenix is Brian Tibbs. We'll take a quick break to thank our sponsors. We'll come right back and we'll talk to Brian. Investing in rental properties can be complicated, but it doesn't have to be. My friends at Mid-South Home Buyers sell completely rehab turnkey properties in both Memphis and Little Rock, and they've been doing it for 23 years. All their properties come totally rehab. They put on a new roof, new kitchen, new bath, new plumbing, new electric. Everything is brand new. They also have a tenant that's moved in before you close, so you get cash flow on day one. Mid-South Home Buyers also continues to manage the property for you after closing. It couldn't be easier. Everything is 100% done for you. All their properties also come with a couple of guarantees. They have a 1-year total maintenance warranty and a lifetime occupancy guarantee. Personally, I just closed on my 5th property with Mid-South Home Buyers, and I couldn't be happier. If you want to talk to a happy customer, reach out to me. I'm happy to answer any questions, or you can check them out at midsouthhomebuyers.com. It's a lot of work to find a really good rental property, and when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Brian, when did you start buying rentals?
Yeah, I bought my first duplex when I was 19 years old, and you can do a little bit of math, but it was in 1996, so that tells you how old I am.
And you're still buying today?
I am still buying today. I mean, today I'm not buying today, but January I'm going to buy at least 2 or 3 homes.
Okay, awesome. And what does your portfolio look like today?
My wife and I own 45 short-term rentals in 2 markets, in Boise, Idaho, and the Phoenix metro area.
And do you support yourself off the rentals, or do you have a day job?
Yeah, yep. In 2021, actually January of 2021, we officially retired from W-2 work, and now we just manage the investments.
Awesome. So going back to 96, like when you were first starting, what were you doing for work back then?
I worked for my dad. I had a couple things. I mean, when I was in college at the time, and I was doing a couple different odd jobs in college, and then during the summers, I would work for my dad.
So it wasn't like you were rolling in the money back when you were first getting started.
No, I mean, I wasn't completely broke, but certainly wasn't making a lot of money.
All right. So what I want to do is I want to kind of map out how you built your portfolio through different periods of time. So when you were getting started in 96, what would you say the market was like back then?
Yeah, I was a kid and I didn't really know anything about the market. And so I'm just going based on kind of hindsight, if you will. And I think, the 90s was a really, really strong economy in general. And I started investing in the Boise, Idaho area, which is where I was born and raised. And I didn't think about going anywhere else, to be honest. And so I just inherited the market that I was in. And to be honest, it was sluggish. My rents, I remember when I bought my first duplex, I bought it brand new from the builder. So I paid absolute top price, right? And everybody was telling me your rents are going to be, I think it was 650 per unit, and it was two-bedroom units, and that wasn't true. And so it sat on the market at 650, and then I dropped it to 625. Ended up dropping it down to 575, where I finally got it rented. So, and it just kind of stayed there, between 550 and maybe 600, 625 for several years. So it just was really, really sluggish. And of course, values weren't really going up at that time either.
Right. Okay. So everything was just kind of stable from, like, so say you got started in 96 until, like, say 2003. Would you say the market was just kind of steady in that period?
Yeah, I would say it's not dropping, but just steady, and I wasn't selling anything, so it wasn't. I was acquiring property at that time, so I wasn't really keenly aware of what valuations were doing. But honestly, if you look back, it just wasn't a real robust real estate growth time.
So what did you buy in that period?
So I bought my first duplex, partially out of just a desire not to pay somebody else rent. My dad kind of taught me that concept of, if you're going to be paying a mortgage, it might as well be your own mortgage. And so I wanted to have my own property. And then beyond just getting my own house, I was like, I should get 2 units so that the neighbors can pay a bigger portion of the mortgage than I'm paying. So that's what I did. And then I decided, I just want to add at least 1 unit every year. So the next year I bought another duplex. And so instead of 1 unit, I got 2. The year after that, I got another duplex. And then maybe 2 years later or 3 years later, I got a 4-plex. So I built up to 10 units in that period.
And so in that period, you weren't seeing any real rent growth. There wasn't really much appreciation. You were just buying properties thinking, I'm just going to hold these for the long term. Eventually, they're going to get paid down, and I'll just keep adding to my portfolio.
Yeah, I was 19, 20, 21 years old, and I was just doing the math. Okay, these things will be paid off when I'm 50. And so then I'll just live off of them. That was the extent of my strategy.
All right. So that's the plan. And then in the early 2000s, like 2003, 4, 5, that's kind of when prices started going crazy in that period. So was it hard to buy when all of a sudden you're used to paying one price for properties and now all of a sudden everything is going crazy?
Yeah, honestly, I don't remember exactly the year that I bought my 4-plex, but it would have been 2000, 2001, maybe 2002 when I bought my 4-plex. And that's the last thing I bought until after the crash. So and it wasn't because I got scared. I was busy. I was still really young and focused on other things. And I had these 10 units and I was managing it myself. And that was enough to kind of keep me busy. And then when prices were going up, I just wasn't super motivated to add any more units. And so I just didn't. In fact, I started to get a little bit nervous when prices really started going up. And I started selling off some of my units, 2005, 2006.
Okay, awesome. All right. So that's a good question. So if in 2005, like things were at a peak, you're maybe getting a little bit nervous, and you sold, but today prices are much higher than they were at that peak. Do you regret selling, or do you think that was a good move?
No, it was absolutely a good move. And I'm not going to say that I had some clairvoyant, premonition or something like that. I just got a little nervous. And so, so I sold a duplex, and that was really kind of all I was going to do. And then somebody approached me asking to buy my 4-plex, and they offered me twice what I had paid it, like 2 or 3 years prior. And I remember, it's kind of a fun story. I went to a realtor friend of mine, and I was like, I'm planning on keeping this thing till I retire, but this is how much this guy is offering me. What do you think I should do? He stared at me for a couple of seconds, and he said, if this was last year, I would have told you you're smoking rope. That's his way to say that you're high, right?
Right.
And he said, you have to sell it. And it just like that put a little bit of fear in me, but also kind of this fear of missing out, almost like, okay, this is a golden opportunity. I can't pass it up.
Right.
So I went ahead and did it. So I went, pretty quickly from 10 units down to 4, and then just sat and waited. And then, it was maybe a year later that everything had peaked and started to really crash quickly.
Yeah. So that was like 2008, 2009, everything crashed. So then you had raised that cash that you sold when things were high. And then how did you redeploy that money?
Yeah, I basically just paid off the mortgages on the other 2 properties and just had an attitude, I'm just going to sit and wait. And that's what I did. And then in 2009, I jumped back into the market, maybe a little early, to be honest, but I jumped back into the market in 2009 and started buying, and I haven't looked back.
Okay. So now that was kind of a scary time, because like looking back on it today, it's easy to say, okay, 2009, the market crashed. It's a great time to buy. But like having lived through that, it was kind of scary because you would see prices coming down and you think, oh, this is a good price. But then 6 months later, it's even cheaper.
Yeah. I mentor new investors, and I hear that all the time. I was like, well, if I wasn't 4 years old back in 2009, I'd be buying everything that there was.
Right.
Well, let me tell you what it was like in 2009. Number one, the financial markets froze. What that means is banks were not lending money. So if you didn't have piles of cash, what are you going to go buy? Right. It was really difficult, especially with somebody who didn't have established credit or lots of assets or something to back up the loans they were going to get. It was hard to get financed. Mm-hmm. And number two, I mean, there were articles in the news that capitalism is over. Real estate will never recover. I mean, it was like very scary time. And yes, I jumped back into the market, but it was kind of like, let's bet the future here, because if this doesn't work out, we're going to be, greeters at Walmart or something like that. I mean, it was a scary thing to do, but I guess I had enough faith, I get in myself to a certain extent, but also enough faith in the American economy that we still have something superior to offer, and we'll figure out a way to climb out of this.
Yeah, and that's the thing to keep in mind. Whenever there is a crisis like that, things always get better. And it's like we saw that in the early days of COVID when everyone was scared. Like we recovered so quickly from that. So So I think that was a smart way to think about it. So then in that period of time, say from 2008, 2009 to like 2012, how did you grow your portfolio in that period? Yeah,
so fortunately, I still had some cash left over from the duplex and the fourplex that I had sold even after paying off the duplexes. And so I used that cash to buy some land, 4 parcels, and then hired a construction company to build out 4 townhomes for me. And when it came time to pay off the builder, I just refinanced the duplexes and got those up and running. And then those, several of those were paid off. So then I refinanced those and then went and bought more units. And, just slowly, 1 at a time, 2 at a time, 3, 4 at a time, continued to build the portfolio.
Awesome. Okay. So you came out of that pretty good. The financial crisis.
Yeah, I mean, the timing was perfect. Again, I'm not going to take credit for having some future vision or something, but the timing just really worked out.
Yeah. Okay, so then 2013, things start recovering. And I guess I would probably consider 2013 to 2019 kind of the next period in the market where things are kind of steadily going up. How did you deal with that market?
Yeah, I mean, it's something I think it's really important that every period that our economy goes through is different a little bit. I mean, there's some similar themes that go throughout history, but every market's a little bit different. And as an investor, there's no, there's a temptation for us to hit the easy button and we're going to automate everything and we're not going to have to think or work and we're just figure it out and just push and play. Well, I think really the smarter investor is going to be really critical of what they see in front of them and understanding the opportunities that they have in front of them. The kind of stuff that I would buy in 2013 through 2019 is different than the kind of stuff I would buy now. Now prices are so high and interest rates are so high that I have to do creative stuff that I wouldn't have done in 2013. In 2013, I was buying brand new homes from builders again because they were trying to unload inventory and they were giving really good discounts. If you could do a pre-sale, like buy a piece of property before it was built, you could get brand new perfect property with a warranty from the builder for cheaper than retail, right? So I would do stuff like that because there was a glut of construction inventory.
Right.
Now I'm buying stuff built in the 1950s and 60s that's in desperate need of an update so that I can build some equity in the project so I don't have to put so much down payment when it comes time to refi, right? So you just have to look at every single market, and it takes work, right? It takes effort, talking to other people, kind of figuring out what's going to work in this market and adjusting. And we saw in the last, year and a half, how dramatically the landscape changed for real estate. You've got to be able to adapt quickly.
Right. Now, I think the 2013 to 2019 period, I think that the most challenging thing for me personally was I would buy a property and then maybe the next year want to buy another property in the same area, but now I'm having to pay more for it because prices were going up. Well, was that hard to do? Like when the prices were going up like that
Yeah, I mean, psychologically, that's tricky because your mind says, no, that house isn't worth 300,000. It's worth 240. That's what I paid last year.
Mm-hmm.
And what I would do oftentimes is I would, swap till you drop. You sell a property, put it in a 1031 exchange and buy something else a little bit bigger. So I'd sell a duplex and buy a fourplex or something like that, or sell a single family home and buy a duplex or something like that. And so I wasn't as concerned because kind of my goal was I want to add units.
Right.
And I'm going to underwrite it. I'm going to make sure that's a good deal. I'm going to measure. So something else too, from 2013 to 2019 in that period, rents were rising, not dramatically, but rents were rising. So you do your math and, you're trying to cover your debt service, you're covering your administration. Who cares what the cost is as long as your underwriting is done correctly and the thing is cash flowing. And that's kind of how I looked at it.
Right. All right. So then the next period was probably a once in a lifetime opportunity in 2020 when the rates went really low.
Yeah.
What did you do then?
Yeah. So this is similar to 2000. Honestly, this is similar to 2008. The world is over. Everybody's going to die. The economy has been shut down. The Fed dropped rates to zero because they're terrified of a depression, right? Mm-hmm. So put yourself back into that environment. And if you were investing in that time, that was scary.
Yeah.
And I remember, I'm not proud of this, but I remember talking to my wife about a fourplex that we owned, and we had a half of an acre in downtown Boise, phenomenal location. And I panicked and I listed those both for sale and I sold them.
Oh, no.
Because I thought the world was shutting down. Yeah. And here I've got one asset that's underperforming and I've got a piece of land that's not getting me anything. And I heard rumors from my builder. We were going to build a 17-unit complex on that land. I heard a rumor from him that the banks are canceling all the lending that they had approved and all this kind of stuff. So I sold it, and I think I lost $2 million on that deal because of how much it would have gone up in value had I finished the project, sold off the units or kept them or whatever. I lost $2 million in value by making that panic decision. But the good news is, after I sold them, I called the title company and said, okay, I decided I wanted 1031 these. I'm going to redeploy the capital. And while I did lose $2 million on panicking, the other stuff that I bought has gone up by $1 million in that same amount of time. So I guess I'm down a net of $1 million.
But still, you're up $1 million. So
I'm up $1 million. That's the glass half full.
So did you refi a lot of your properties in that period?
I did. I think that was probably the best strategic decision I made in that period. Not in 2020 as well, but kind of in 2021 when rates were still rock bottom. But we could kind of tell that the world not everybody was going to die. We kind of figured out that, okay, this isn't as bad as maybe we thought it might be in the beginning. And so I was kind of tooting the horn to anybody that would listen, get as much, this sounds really dangerous, but get as much debt as you can at 3% and lock it in for as long as they'll let you lock it in. And that's what I did. And that's how I was able to grow really from 2021 until now.
Did you buy a lot in that period too? Because that's when prices started running up. Were you buying too?
Yeah, I doubled my portfolio from 2021 till mid 2022.
Nice.
So I just I refinanced everything and just piled it in and bought more property. And that was, here we go again. That was scary. There was one deal where I was the winning bidder out of 50 bids. Wow. And of course I bid the amount that I was willing to pay, but as soon as my agent said I won the bid, I was like, well, I paid too much then because there's 50 people bidding for this thing.
Right.
And so that, that puts a little bit of fear into your heart that like, is this all going to come crashing down? And did I overpay? And what am I doing in this frenzy market? But I'm still up on that property too. So because that was in early 2021 and prices still kept going up through 2022 and even 2023.
Yeah. I think a good skill to have as an investor is you have to be a little paranoid about what's going to happen. But at the same time, you have to be optimistic that things are gonna be better in the future.
Yep. So speaking of that, I did some research that I think is fascinating and really important for investors to know. Maybe not flippers. Flippers, that's a whole different business. But if you're a long-term buy and hold investor, I went back and looked, and the United States Census started tracking the median home price in 1940. So think back to 1940. We're in the grip of the Great Depression. So they started measuring median home sale prices nationwide. Now, obviously, individual markets are going to behave differently, but from 1940 till 1950, and then 50 to 60, 60 to 70, all the way up till 2020, there's not a single 10-year period from the zero, 1940 to 1950, and so on. There's not a single 10-year period where real estate median sale prices in the United States haven't increased by at least 40%.
Wow, that's incredible.
That's with the Great Depression, World War II, Korean War, Vietnam War, like 6 recessions, the Great Recession of 2008, COVID in 2020, the dot-com bust in 2000. And so if you're a long-term buy and hold investor, we can't say for sure that the future is going to behave like the past, but that's all we have to look at. And if it does continue to behave like it has for the last 80 years, holding property for 10 years is about as riskless of an investment that's out there.
Yeah. Yeah. I think that's spot on. Well, so that brings us to where we are today. Over the last couple of years, prices have been high, rates have been high. What are you doing in this market?
Yeah. So my strategy right now, because of the high prices and the high interest rates, and it's easy to look at people who've already accumulated a certain amount of property or wealth or whatever and say, oh, it's easy for them because they've got cash. Mm-hmm. Listen, I'm trying to put as little cash into every deal as I possibly can because I want to continue to expand.
Right.
And so now, in order for something to cash flow, and that's a requirement of mine, it has to cash flow. I'm having to put more money down per se, but I'm trying to create that through improving the property. So I'll buy a busted up property. I'll add a bedroom, bathroom, or a garage, or an ADU, or I'll add something to it to create more value than what it had when I bought it. So the cost of the property plus the rehab creates more value than what I started with, so that I can apply that towards what essentially becomes the down payment when I refinance it. So I'll buy the property with cash, rehab it with cash, get it in its perfect state, then refinance it, and it's getting refinanced at the new valuation. And trying to put, I'm trying to still put in 10% as a down payment of actual cash, and still letting the property cash flow.
Yeah, that's a good strategy. That's a good strategy. So have you been buying a lot in the last, say, 2 years?
Yeah. In the last 2 years, I've added 18 units, I guess, something around 15 units maybe.
So that's really, I think, where you've really shined as an investor is you're always buying. You're just modifying your strategy to fit whatever the opportunity is at that moment.
Yeah, I'm always buying and very rarely selling. I think that's something that, there's always an argument to sell and you should consider that option. But you also need to think about the cost of selling. So my asset class right now that I do is short-term rentals, and it takes a lot of work to get a review base built up, to get kind of marketing dialed in, and to get a property where it's really performing well, and just to sell it and liquidate the furniture at 25% on the dollar. And it's just really expensive to trade. So I buy as much as I can, and I just really don't like selling unless there's a real compelling reason to do it.
I think my biggest takeaway from hearing Brian's story is that it's always a good time to buy rental properties. When you look back over Brian's 30-year career of buying rentals, there were very few years where he wasn't buying properties. It seemed like when the market was really high, 2004, 2005, he wasn't buying anything. But every other year, he was adding to his portfolio. And I think that's really the key, is you just have to figure out what the best strategies are today to make a deal work. And it seems like Brian's done a great job with that. If you want to learn more about Brian's story, he's written a book where he outlines and goes into more details on exactly how he built his portfolio. He also offers coaching. If you want to find out more about that, I've got links to his websites at rentalincomepodcast.com/episode 503. I'd like to thank Chaley Ridge from Ridge Lending Group for sponsoring today's episode. If you're looking to buy a rental property, whether you're just getting started or you want to add to your portfolio, reach out to Chaley. She's a nationwide lender. She has a ton of different loan programs, and she can find something that'll work for you. Just go to ridgelendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. I'll be back with the new episode next Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.